Hello guys, hope you be fine. First of all, like and subscribe my channel and press the bell icon for new video. So today's topic is we talk about 5 essential reasons to consider life insurance before age 40. It's smart to consider life insurance when you are younger. Life moves fast when you are building a family, and it's easy to put off thinking about the future. And but life insurance can protect your loved one if something happened to you. It can help cover your mortgage, childcare, or college costs. Think your family may struggle to afford without your income. Buying a policy early means lower costs as you get older. Life insurance gets more expensive and more complicated to qualify for. When you consider life insurance when you are younger, you lock in lower rates and can choose a plan that grow in value over time. Some even build saving you can use later. Life insurance is more than just a safety net, it's a wise, caring choice that protects your family and future. Key takeaway: lower premium cost at a younger age, increased qualification, likelihood, and longer coverage duration and stability, financial protection for dependents, cost effective wealth building. Permanent policies frequently ask question: why should you consider life insurance when you are younger? Key takeaway: purchasing life insurance before age 40 and locks in lower premium that remain fixed as your age. Younger applicant face easier qualification with favor medical hurdle and lower risk assessment. Early purchase ensure lower and the longer coverage duration and premium stability into older age. It provides financial security for dependents by covering expenses like mortgage and education. Permanent policies build tax deferred cash value more cost effectively when started before age 40. Lower premium cost at a younger age, while life insurance premium rise with age due to increasing mortality risk. Purchasing a policy before 40 age and enables people to secure a lower rate that remain and fixed for the policy duration. This premium affordability stems from age advantages and what younger individuals typically pay for less. For example, a 30-year-old faces monthly costs that are quarter to half of those of a 50-year-old for comparable coverage. For instance, whole life premium for the 25 lakh dollar coverage escalate from 60 per month dollar per month age at 20 to $54 per month age 50, reflecting the reduced life expectancy of older applicants. And term life insurance is especially appealing for those looking for economical option during these years. Women benefit from even lower rate across all ages due to their longer life expectation. The expectancies by looking in these rates early, individual foster financial stability, joining a community of a proactive planner who minimize long-term expenses through strategic timing. Additionally, a 35-year-old no smoker can pay approximately $65 monthly for term life insurance, highlighting the cost saving of early purchase. This approach guarantees sustained affordability and peace of mind. Increased qualification likelihood: younger applicants generally face higher qualification rates for life insurance due to favorable age-related factor. Insurance company assess risk through the underwriting process, often finding that younger person meet qualification criteria with greater ease because of lower perceived health risks. These include less stringent medical requirements such as favor exam and simplified health evaluation, which reduce barrier to approval. With fewer pre-existing conditions prevalent in youth, the underwriting process becomes less complex, allowing for straightforward application and faster decision. Additionally, they typically enjoy lower premium compared to older applicants, reflecting the decreased mortality risk associated with youth. Longer coverage duration and stability: securing life insurance with a longer coverage duration offers essential stability by extending protection over extended period, often up to 30 years, to address the significant life phase such as raising a family or career changes. Full policy benefit include locking in lower premium when purchased before the age of 40 as costs tend to rise with age. For example, 25k dollar policy for a 40-year-old male costs 43.93% dollar monthly compared to higher rates later. Understanding the impact of premium factor can help individual make and informed decision about their policy option. Coverage option allow individual to extend term up to 30-year-old or opt for high coverage such as the $1 for approximately $1,000 per month, ensuring sustained financial security. This adaptability fosters a sense of belonging within a stable family unit, supporting long-term goals without the burden of escalating expenses. Policies remain effective, providing ongoing stability into older age. In 2023, with record sale of US individual life insurance, purchasing early can offer even greater advantages in securing favorable term financial protection for dependents. Life insurance plays a critical role in the safeguarding dependents by covering and significant expenses such as the mortgage payment, daily living costs, and education after the and policyholder death, therapy, alleviating financial burden, and the promoting and the stability beyond these necessities. It guarantees financial security by settling outstanding debt and the liabilities and preventing overwhelming strain and on loved one. This protection also replaces lost income, allowing dependents to maintain and their standard of living and their standard of living and pursue financial independence without disruption. For those seeking lasting family stability, early enrollment foster a sense of belonging and as it shield family from unexpected event, enabling them to focus on shared goal and psychological well-being. Additionally, given that the 30% of recognition gap among Americans for life insurance purchase despite awareness of its benefits, securing coverage before age 40 can address this common oversight and enhance long-term protection. Ultimately, it reinforces financial security as a foundation for a resilient, supportive family dynamic, cost-effective wealth building and permanent life insurance policy facilitate wealth building by accumulating cash value that grows tax deferred, offering a practical avenue for long-term financial growth for those under 40. Lower premium render these policies cost effective, allowing cash value to compound over extended period with improved tax efficiency. And this tax efficiency enables wealth accumulation without immediate tax burden, making it deal for savvy persons seeking financial security. And policyholder can assess their cash value through loans or withdrawal for needs such as retirement funding or emergency, often without incurring capital gain taxes, while dividends may further enhance growth. Additionally, policyholder can take loan against the cash value which offer competitive interest rate and require no credit check, providing another layer of financial flexibility. Furthermore, and early adoption of life insurance offer guaranteed lifelong coverage, adding estate planning and wealth transfer, helping people integrate into a community of forward-thinking planners who prioritize and lasting financial stability. Frequently asked question: why should you consider life insurance when you are younger? Starting early locks in lower rates and helps you qualify more easily. It also provides your family with long-term protection and can even accumulate cash value over time. How do I select a life insurance provider? Selecting life insurance provider requires evaluating the provider reputation through financial rating and customer reviews to assess reliability. People should also determine coverage options such as term, whole, and universal life insurance to tailor policy that foster and personal security and a sense of belonging. What is the claim process for life insurance? In the intricately complex domain of life insurance, the claim process unfolds methodologically. Beneficiaries initiate the process by contacting insurance, compile critical claim documentation, submit it accurately, and monitor the payout timeline for efficient approval and payment. Can life insurance policy be transferred? Life insurance policy can indeed be transferred, allowing for challenges in the policy ownership through options such as direct transfer or the irrevocable trust. These involve formal paperwork, tax consideration, and guarantees that new owner handle premium for effective estate planning. How does inflation affect life insurance coverage? And inflation, in fact, erodes the genuine value of life insurance coverage and juxtaposing promised financial security with the diminished purchasing power, while coverage adjustments such as index benefits and foster a sense of belonging by ensuring beneficiary long-term economic stability. What are the main types of life insurance available? Term life covers you for a set number of years and is usually the most affordable option. Whole and universal life insurance lasts your entire life and can also build cash value that you can use later. How do term and permanent life insurance compare? Term life insurance is the ideal for younger families and seeking affordable protection during the critical life stages such as rising children are paying a mortgage. Permanent life insurance costs more but can grow saving over time and support long-term goal. What are common mistakes when buying life insurance? Common mistake when buying life insurance includes selecting inadequate coverage that fails to address financial need and policy misconceptions such as the misunderstanding policy type or neglecting the impact of inflation or payout leading to the suboptimal protection for dependents. And life insurance help protect your family. And guys, now we talk about the best family life insurance shopping guide. And what is family life insurance? Family life insurance is a broad term for policy that cover different number members of your family. You can use this policy to pay for a range of expenses such as funeral and burial costs and college debt, lost income, or childcare. Who needs a family life insurance policy? In general, life insurance is important for any family member whose death would place a financial burden on other. You can determine who need life insurance by looking at the role your family member play their financial responsibility. For example, handwriter and breadwinners may need life insurance to replace their income, while grandparents may want smaller policies to help cover funeral expenses. Stay at home parents may also need life insurance to replace the value of the service and child care they provide at home. A single life insurance policy typically won't cover your entire family, and but you can purchase a policy for yourself or a joint policy with your spouse and then add readers or buy individual policy to provide coverage for other family member. Why you should get family life insurance? Some family member might not need a life insurance policy. However, you should consider life insurance to meet the following basic financial needs of your family. Replacing income. Life insurance can help your family cover daily living expenses and handle the financial loss of a wage earner who was a primary or secondary source of income. Paying off debt. The debt benefit from a life insurance policy can help your family pay off or pay down large debt like mortgages, student loans, or even credit card debt. Covering education expenses. If you are parent, life insurance can ensure future opportunity for your children such as college or private school tuition remain affordable. This can be especially important for children with special needs who might require a financial safety net as adult. Providing for final expenses. Life insurance can provide and reassurance for older family member worried about leaving behind the burden of funeral cost. It can also help with covering any estate taxes. Best life insurance for couple. The best option for most couple is to buy separate life insurance policy for each spouse. There are two types of coverage available: term and permanent life insurance. Term life insurance is sufficient for most families. You can set the length of a term policy to cover you until your kids are grown, your mortgage is paid off, your family no longer relies on your income. Permanent life insurance policies such as whole life typically offer lifelong coverage and build cash value. However, these policies are generally more expensive than the term life insurance and joint life insurance policy for a couple. In some cases, it may make sense to buy a joint life insurance policy, often called second to die or survivorship life insurance that covers both you and your spouse. In general, joint life insurance policies for married couples are a type of permanent life insurance that pays out after both policyholder die. The main purpose of this policy is to help cover costs like estate taxes or lifetime care for a child with a disability after both parties die. If only one spouse dies, the serving spouse does not receive a life insurance death benefit and is responsible for paying premium and moving forward. Because of this, joint life insurance policy are best for couples who are financially independent and can cover living costs without the help of a payout. Because premium for joint life insurance depend on the age and medical histories of both you and your spouse, or your spouse even medical condition can drive up the cost of entire policy. However, if you are both healthy, sharing a policy might work in your favor financially because insured don't have to pay out until both parties die. They spend more year collecting premium. This translates to lower risk for the insured and lower rates for you. When you are shopping for joint insurance, compare your costs with the cost of individual policy. For example, the average annual cost of 20-year term policy for a healthy 40-year-old individual paying the 5K dollar average $334 for men and $282 for women, according to Cover Financial Technology and Best Life Insurance Company. Best Life Insurance Policy for Children. Children don't typically need life insurance if you want to cover unexpected costs or save for your child future. You are usually better off opening a saving account. However, life insurance policy for kids are available if you want them. In general, these policies are a form of whole life insurance, and which means coverage is valid for the child. Life policies typically include a cash value component that builds slowly over time. Some insurers allow you to pay off the policy after 10 or 20 years, which could allow adult children to either claim the cash value of the policy or take out loans against it. In some cases, you can lock in the option to add more coverage in the future, regardless of the child health. Later in life, best life insurance plan for parents or grandparents. You may not need to buy coverage for older family member, especially if no one relies on them financially. However, shorter term policies are available to provide an inheritance or cover specific costs such as funeral expenses or estate fees. While there are options, older family members may find it tough to qualify for life insurance due to their age or health, and coverage can be expensive. The best life insurance policy for senior may include burial insurance. These are typically small whole life policies, sometimes referred to as a final expensive insurance that help cover final expensive like funeral cost. Guaranteed issue life insurance. This is a type of permanent life insurance that guarantees coverage regardless of your age or health, but it can be pricey. Usually, applicant must be aged 50 to 85. Guaranteed universal life insurance. This type of coverage is a combination of term and permanent life insurance cause it offer lifelong coverage but bears minimum cash value. It can be cheaper than whole life policy. Family life insurance solution through work. If you get life insurance through work, you may be able to do add supplemental life insurance for a spouse or child, but review your current plan before purchasing more coverage, as your basic policy may already cover your spouse or child for free. There are pros and cons to buying group life insurance through work. Rates for supplemental coverage are not usually locked in, which means premiums can increase with age. There are also limits to how much coverage you can buy for yourself, a child, or spouse. Costs are vary among employees, so you should shop around to see if buying an individual policy on the open market would be cheaper. Certain rules may also restrict your option. For example, you may need to purchase supplemental coverage for yourself before buying additional life insurance for your spouse or child, and cause supplemental coverage through work is not always guaranteed. You may need to submit evidence that you are in good health to qualify. When buying additional coverage through work, check if your policy is portable. Group life insurance typically tied to your employment, so if you leave your job, you might not be able to take supplement life insurance with you. Life insurance option for military families. If you are active duty US military or National Guard, you and your family members may be eligible for a type of group life insurance called Family Service Member Group Life Insurance (FSGLI). Some military spouses are automatically enrolled in life insurance, and the premium, which increase with age, can be deducted from the service member pay. And for children of active duty service member, FSGLI provides coverage at no cost until the age of 80. In some cases, fee coverage can continue if the dependent is a full-time student or become permanently or totally disabled. Life insurance rider for your family. If you want to convenience of a single policy but need extra coverage for a spouse or child, consider adding rider to a term or permanent life insurance policy. Life insurance right or expand policy coverage to a specific person or a specific need. You can buy rider on the open market and sometime through your employer. Not all insurers offer the same rider, and availability can differ from state to state. Suppose term rider valid to certain number of years but typically expire when the term policy they are attached to expire, or when the spouse reaches a certain age. You may be able to convert a spouse rider to an individual policy before it expires. Child rider cover a set period of time and pay out if the child dies during that period. These riders typically cover children from 50 days old to 25 years old. At that point, the child may be able to convert the rider to be an individual life insurance policy. Life insurance riders are not always worth it depending on the coverage you want and the health of your family member. It might be cheaper to buy a separate policy instead of adding a rider, and because policy usually end If the insured and the die relying on a rider can leave family member with no life insurance after the death. Frequently asked question: what type of life insurance is best for family? What's the best life insurance approach for a large family? Guys, I hope you will enjoy this video. Like and subscribe my channel for new videos and update. Tell me in the comment how was that video and how was that. Prove yourself. Have a nice time. Goodbye.